Welcome to Illuminati Silver. We tell the truth about silver. Today is very late on Sunday, the 5th of January 2025, and a happy new year to our listeners. Christmas was quite eventful for us in that we visited family and friends and also held a number of festive party occasions. The weather in the UK has experienced snow in most but not all parts, but part of it is now clearing for what we have grown to expect, rain. We hope at least where you are, the weather has at least been favourable. Looking at our regular weekly financial update, we've stated the past 2 weeks we did not expect much excitement in the financial markets unless a major geopolitical event occurred. Broadly speaking, one has not. It transpires that the last 7 days have been rather uneventful, similar to the previous 7 days, though we have seen slightly firmer precious metal prices, and crypto has started to rise again, no doubt in anticipation of Trump's inauguration in a little over 2 weeks' time. So what happened to gold and silver last week? Well, gold rose $18, rising from $2,623 to $2,641, rising to as high as $2,666 and as low as $2,596. The spread between its high and low was $70. Last week, we predicted gold would trade between $2,575 and $2,675, which it did comfortably. In sterling terms, gold rose £40, closing at £2,132. This shows how strong the dollar was compared to sterling, and also compared to the euro, because in euros, gold rose €48, closing at €2,564. Silver rose 23 cents, rising from $29.41 to $29.64. It did breach $30 at one stage at $30.14 and went as low as $28.81. The difference between its high and low was $1.33. Now, last week we predicted silver would trade between $28.25 and $30.75, which once again it did comfortably. In sterling terms, silver was up 47 pence at £23.92, and in euros it was up 0.51 euros, that's half a euro, at 28.82 euros. The gold to silver ratio fell very marginally from 89.2 to 1 to 89.1 to 1. Bitcoin currently stands at $98,600. That's up $4,000 on the week. US equities were marginally lower. The Dow Jones down 260 points at 42,732. The S&P 500 down 28 points at 5,942. And the Nasdaq Composite down 101 at 19,621. Though the UK index was higher, with the FTSE 100 closing up 74 at 8,223. Oil prices were higher again. Brent crude up $2.40 at $76.57, and WTI crude up $3.36 at $73.96. The dollar index is also up almost 1 full point at 108.96. Now, economic data coming out of the US last week was again pretty limited and uninspiring, though pending home sales were up 2.2% in November, and the ISM manufacturing for December came in at 49.3% compared with expectations of 48%. This week will be a little more exciting, with services PMIs on Monday and Tuesday, the ADP employment report on Wednesday, and most important of all, the US employment report on Friday, with expectations of 155,000 new jobs in December compared with 227,000 in November. We have to admit, though, that these reports have had to be corrected no end of times in the last 3 or 4 months due to, we're not quite sure what. there seems to be an inability to gather correct data within that department. The unemployment rate, though, is expected to remain stable at 4.2%. Now, analysts currently fear that strong payrolls this week could push Treasury yields higher, thereby strengthening the dollar further and lowering the gold price. On Wednesday, though, the minutes of the Fed's December meeting will be published, and traders will certainly look at these to gain some idea of future direction, though we believe the Fed has already made this clear. More hawkish short-term rather than dovish. Industrial silver demand surged 7% in 2024, outpacing supply by 182 million ounces, signalling a persistent long-term market deficit. Please bear in mind there's still quite a considerable amount of silver available above ground, which is why we're not seeing prices skyrocket. Not as yet. China's $411 billion stimulus for 2025 could fuel silver demand, boosting industrial growth tied to renewable energy and infrastructure. That said, like gold, a strong dollar and rising yields could at least dampen positive momentum short term, and traders may decide to wait until the CPI report due on the 15th of January before making any significant moves. We do expect some slight positive momentum though, but vacillation is also highly possible until the payroll report is known. The Fed has signaled that 2025 is likely to see just 2 rate reductions amounting to 50 basis points rather than a previously predicted 4. We stated last week that the ECB has come out stating that rate cuts will be slower than expected due to an uptick in inflation, and Trump's threat of tariffs could add to that inflation if he does actually carry them out. Analysts are therefore suggesting silver support at $28.75 with a break no lower than $26.02. Should this be breached. Resistance is forecast at $30.44 with a minor top at $32.33 should this be exceeded. Gold resistance is predicted by analysts at $2,675 and $2,684, with support at $2,579 and $2,525 beneath that. So where do we forecast gold and silver this coming week? Well, we're expecting gold to trade between $2,585 and $2,695, with $2,560 and $2,710 as outliers. Silver we expect to trade between $28.50 and $31, with $28 and $31.25 as outliers. What do you think is going to happen? Please do share your thoughts. Thank you for listening. We'd appreciate it very much if you would give this video a thumbs up, subscribe, press the bell sign. Pop on over to Finances Do Matter and subscribe there if you haven't done so. New videos coming out on that channel next week. Meanwhile, we're now moving into very early Monday morning. Have a great and prosperous week ahead, and we'll catch up with you, certainly by next weekend.